You know what's wild? In every bull market, when everything's going up and people are making money left and right, the dumbest investor in the room often walks away with the biggest gains. Not the analyst with 6 monitors, not the guy reading earnings reports all night, but the one who buys a few stocks, forgets he owns them, and somehow doubles his portfolio. Sounds crazy, right? But here's the thing. In a bull market, the biggest risk isn't making bad decisions. It's making too many. And the dumb investor? He doesn't overthink. He doesn't panic. He does nothing. And that's exactly why he wins. Part 1. What even is a bull market? Okay, so quick refresher. A bull market is when stock prices are generally rising for an extended period, usually driven by optimism, strong economic data, or just good vibes and FOMO. In this environment, most stocks go up. Doesn't matter if it's Apple or Future AI Blockchain 420 Inc. Everything is green. In theory, it should be easy to make money, but not everyone does. Why? Because people get in their own way. Part 2. Meet the dumb investor. Let's talk about our friend, the dumb investor. He's not reading the Wall Street Journal. He doesn't know what the Fed is doing. He buys random stuff like Tesla because he likes the Cybertruck. He bought Nvidia because someone on Reddit posted a meme. Then he forgets he even bought it. Fast forward a year, stock's up 60%. He's up big. He didn't flinch during the dips because, well, he didn't even know they happened. Ironically, this dumb approach ends up being incredibly effective during a bull market. Why? Because he didn't panic sell during a 5% dip. Rotate into value stocks that underperformed. Try to time the top. Read 500 articles convincing him the crash is coming tomorrow. He just held on, and that's the cheat code in bull markets. Part 3. The smart investor trap. Now contrast this with the so-called smart investor. Reads all the newsletters. Listens to 4 financial podcasts. Has a spreadsheet with 19 tabs. Follows 15 market gurus on X. But here's what happens. They sell too early because the stock is overvalued. They jump out during every dip because they're managing risk. They miss big runs trying to buy back in at the perfect price. They get paralyzed by analysis. In short, they overthink everything. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." Sometimes the dumb investor wins because they're too lazy or too unaware to be impatient. Part 4. Real proof. The dead account theory. This sounds like a meme, but it's real. Fidelity once studied the best performing investor accounts. And the top performers? People who were dead or had forgotten they had an account. You can't make this up. No trades, no timing, no panicking. They just let compounding do its thing. Think about that. All the effort, the stress, the technical analysis, sometimes it actually hurts more than it helps. Part 5. Why this works. So what gives? Why do dumb investors win during bull runs? Here's the real reason. Bull markets are driven by momentum and emotion. You don't need to beat the market. You just need to ride the wave. The biggest enemy isn't the market, it's you. Your fear, your overthinking, your ego. The dumb investor, he has none of those problems. He buys, he holds, he chills. Ironically, that's often the best strategy. Part 6. What can you learn from this? Okay, so you shouldn't try to be dumb, obviously, but you can learn from them. Keep investing simple. Stop checking your portfolio 5 times a day. Tune out the noise. Don't try to time every move. Be more patient than you think you need to be. The dumb investor accidentally follows the most powerful principle in investing. Buy great assets. Hold them. Don't freak out. That's it. Listen, you don't need to be a genius to build wealth in the market. You don't need to predict the next recession. You don't need a PhD in economics. You need discipline. You need patience. You need to believe in the long game. Because here's the truth. Time in the market beats time in the market. So instead of stressing about whether now is the right time to buy or sell, focus on building good habits. Stay consistent. Think in decades, not days. Be boring, and let your money do the exciting part. The market rewards people who stay the course. So yeah, maybe the dumb investor wins because they don't know any better. But you can win too, because now you do.